Okay, my beautiful friends, seriously, here we are. It's going to be epic right at the open. Let's talk about these markets. Yeah, it is Thursday, March 5th, 2020. Stocks are set for around a 700 point drop right at the open now. As I covered yesterday in my post-market report, that 10-year yield appears to be a pivot point here in this current environment. Right now, again, as I am doing this video blog, the 10-year yield has plunged, cratered from yesterday. It is 0.94. The market doesn't like this. And as you can see, stock futures are set, they're diving, which means the market is going to take a hit right out of the hole. People, I cannot stress this enough. I'm going to repeat it. Yesterday, it seemed like the bond market stabilized for a little bit. We went above 1% on the 10-year yield and stocks took off. So pay attention to the 10-year yield if you look at nothing else with regard to the yield curve. Understand, the extreme short end of the curve, there's something seriously, I don't even know the word for it. The Federal Reserve is involved right now in the biggest scam in the history of the financial world with this repo operation that they're pulling off. Hundreds of billions per day. Yesterday, 105 billion, or the day before that, 120 billion. It's incredible. They're going to do it again today. They already did 20 billion, and they're on their second operation right now. This environment we are in is so twisted. You all know that, people. I don't know another way to put it. So look, this is pretty obvious to me. The connection, and it should be to you, with the debt market, which is the biggest bubble in the world. There's been nothing like it. And again, we just got an emergency rate cut from the Fed. What does that mean? For the Fed to keep rates low, they got to get in here, add digits to a screen, and buy the debt. The president calling for negative rates, more debt, quantitative easing. The man can't stop. You don't see this unless there is a financial emergency going on. In other words, an economy in free fall. You know the economy is in free fall. The president will never admit that his economy is in free fall. Instead, we're going to get no confidence vote after no confidence vote in the form of rate cut, rate cut, rate cut, calls for lower rates, calls for quantitative easing. These are no confidence votes. The market isn't going to like it. Look what happened when the Fed made the emergency 50 basis point rate cut. The market cratered. They don't get it. They don't get it, and the president does not understand the stock market. Out of his own mouth, he admitted that. So that means clearly he doesn't understand central banking. So the man's got to stay out of the way here. Got to stay out of the way because this is going to hurt people on a scale that they have no idea of what's coming here. Again, all of these people that are stuck on the long end of this market, 401k plans, investments that only make cash when the market goes up, there's a bubble. They're going to get destroyed. They're going to walk around through time and space not knowing what hit them when this thing corrects to fair value. Now, they have got to get the bond market under control, or literally, this is it. This is freaking it. So like I said yesterday, is it time to buy? No, this is not time to buy. They got to stabilize the bond market first. Crude oil right now is under a little bit of pressure. Of course, that plays a role here. The energy sector is dependent on crude oil. The financial sector is dependent on crude oil. You know that. Cryptocurrencies are getting bid higher across the board. Bitcoin is back over 9,000. The fact that the Fed is going to continue to inflate by design as it gets calls for more quantitative easing and lower rates from the President of the United States, they're going to inflate. So we know what we need to do. People, we got this covered. Number one, just from a trading standpoint, we now understand that 10-year yield, that 1% is a pivot point. It's clear to you. It should be clear now. We know they're going to inflate, so we bet against the debt, become our own central bank. We understand that the current system is toxic by design. So again, we know how to play it from every single angle. Just real quick, most of you know I've been working on a new trading system for months. I cannot get it to work better than the quant system. Now, the quant system has one flaw. In extreme volatility in this market, it gets a lot of mixed signals. The quant system is 100% free. You all know that. You can download it right from my website, traderschoice.net. I think that the quant system is nearly invincible in a market that is normal. When you got volatility like this, it gets a lot of mixed signals. So I have abandoned my current quest for trying to improve on the quant system. I can't do it at this point. The quant system seems to be it as far as I'm concerned. And from the feedback I get from all of you, I am happy to provide that for you absolutely free. I don't ask for a darn thing. Just get it. The quant system right here, traderschoice.net. I am working on something else, all right? Not so much a trading system, but more of a betting strategy, if you want to call it that. Right now, I'm calling it a split strike rollover. And I am working on this. It's going to take months for me to get it figured out exactly. But so far, I'm having some decent returns on this. It's not a trading system. It's more of a strategy on how to basically hedge your trades in environments like this. And when it's done, if I get it to work, I'll put it out too. All right, look, people, that's it. Stock trading doesn't start for about another 23 minutes. We got a market set to crater at the open. 10-year yield cratering, and it's following in tandem. We gotta watch that 10-year yield. That 1% appears to be the pivot. Again, you know what to do. You should be hoarding hard assets here. They're gonna inflate. The central banks, this is their goal. Their goal is to inflate. Not that they have to, they want to. You understand, this issues in their final solution where they become the lender and buyer of last resort, and they suck it right out of you, the borrower. It's incredible. The environment we are in is unlike anything we've ever seen, people. It is truly beyond. It's a freak show. It's an absolute freak show. This guy loves you. I'll see you at the end of the day. I'm out of here.